Hello traders and welcome back to another weekly forex forecast. Today we're having a look at some major pairs and we will also analyze gold US dollar as requested last week. Now, so let's start with EURUSD. Currently on the monthly time frame, as you can see, a nice squeeze pattern was broken with a push scenario, right? So currently trending towards the upside on the monthly time frame. The moving averages are telling us this. Let's move on to the weekly. Now, the weekly time frame is currently in a little squeeze, as we can see over here, right? Resistance, a little nice uptrend over here, kind of consolidation squeeze, forming an M pattern, which could also mean bearish bias, but that's not always the case. Having a look at the daily time frame, we can see everything much more clearer. Area of resistance, nice little uptrend over here. We can see the moving averages are well above the candlesticks. On the 4-hourly time frame, we can see this nice downtrend over here that has been broken. Look, push, exhaustion, push scenario. Very likely a exhaustion probably could happen since this area is a nice resistance. So exhaustion, maybe push towards the upside, towards the daily moving averages over here. Could be a nice trade towards the upside on EURUSD. However, if we have a look at what hedge funds are doing, Euro US dollar is being sold off quite dramatically. Last week 87,000, this week 77,000. So this means that US dollar is actually gaining strength and momentum. So although it is pushing towards the upside, it could potentially mean that the overall bias is definitely bearish and we could see the trade fall down. So what do? We could trade the pullback over here, nice bullish engulfing candle, push, exhaustion, push scenario. Or for a safer bet, we wait for the candlesticks to push higher to reach this area zone where the daily moving averages are at, around this area I would say, and then shoot towards the downside with the bearish engulfing candle as confirmation. Probably a better trade in this case. Would be a bearish trade. However, we could trade the pullback as well. As you can see, a nice break on the 4-hourly, push, exhaustion, push scenario. Could be a nice 160 pip trade. But as I said, hedge funds are selling off euro, so it could be a little bit risky as well. Right now, NZDUSD, what's happening? So we had this nice push towards the upside, push towards the downside, broke out. This area zone is being respected multiple times. As you can see, two bearish engulfing candles and struggling to break this area zone. Could mean that this area zone is super strong on the monthly time frame. Let's head over to the weekly. What's happening on the weekly? We can see a nice, area of resistance over here, currently on the consolidation phase. Again, making M formations could actually mean it's gonna go towards the downside. However, that's not always the case. Let's have a look at the daily. Daily is currently pushing towards the downside. Moving averages are towards the downside. Bearish engulfing candlestick as well could mean that a continuational push towards the downside is in place. 4-hourly, what's happening? A nice downtrend, a little break over here. So I would say that if we get on the 4-hourly time frame, a nice bearish engulfing candle bounce off these 25 and 50 moving averages, could be a nice trade towards the downside to retest this previous area level. In the opposite direction, if we break through these moving averages, could be a nice push, exhaustion, push scenario, maybe towards this area level. However, we need to be aware that the overall bias is towards the downside, so we would ideally want to short the trade rather than buy the trade. So this area zone probably where it would bounce back if we buyed it. So if you want to be a little bit patient, maybe wait for the candlesticks to kind of shoot towards the upside on the daily time frame. Bearish engulfing candlestick of the daily 25 and 50 moving averages shoot towards the downside. It would form a nice little consolidation phase and we kind of enter here, short here, we profit. We also need to remember that NZD US dollar is currently trading near a psychological level, 0.7 thousand, and as you can see, it's kind of struggling. So if we do get a bearish engulfing candle over here, it could be a nice trade towards the downside. Now having a look what the hedge funds are doing, as you can see, the past few weeks, 3,200, 3,100, 1,700. This means that the NZD is getting weaker and US dollar is getting stronger. They're selling off New Zealand dollar against the US dollar, which means that very likely this trade will go towards the downside. It's more favorable to go towards the downside, as I said. Right, USD Japanese yen, we had a nice little squeeze, push up, push down. This area zone is important, right? Bounced off it many times. Weekly, we can see everything a little bit more clearer. Push, exhaustion, push scenarios. Now push, exhaustion, push once again, making a new higher high. However, it's bouncing with a bearish engulfing candle on the weekly. Daily time frame, as you can see, just broke out our area of sensitivity. We had this nice little, trend over here, 1 2 3 touch pattern, nice trend confirmation shooting towards the upside, now has been broken. On the 4-hourly time frame, it's bouncing off. The moving averages are above. So if we do get maybe a little bit better push towards the upside, I would say near the 25 and 50 moving averages and a bearish engulfing candle as confirmation, it could be a nice trade towards the downside. I don't think it's gonna go straight away towards the downside because it did break out psychological level 11000. As you can see, it kind of bounced off here. So this psychological level will obviously be respected, so it might just shoot up a little bit more near this area zone and then maybe shoot towards the downside, and that could be a nice trade towards the downside. However, as I said, weekly and monthly are trending towards the upside, so it might also retest this previous top level. We don't know that, and generally I wouldn't be placing this trade next week at all. So USD Swiss franc, right, resistance, support over here, nice push towards the downside, now a little push towards the upside as well. On the weekly time frame, seeing everything much more clearer, more candlesticks, nice trend towards the downside, very good squeeze pattern, right? We also have this area of sensitivity, which is the resistance zone in this case, bouncing off it on the weekly time frame, giving us a bearish engulfing candle as confirmation to go short. Now on the daily time frame, we can see a nice push towards the downside, and it could potentially bounce off these 25 and 50 moving averages, so we need to be aware of this. On the 4-hourly time frame, we can see that the moving averages are well above the candlesticks, so we could potentially get a push towards the upside since it just pushed through a huge area of sensitivity. Push exhaustion scenario, so maybe trade the exhaustion, could enter somewhere here if we get a bullish engulfing candle somewhere, kind of enter over here, get an exhaustion trade out, maybe profit around 50 to 60 pips, close of the trade, and then look for a short trade to potentially retest this zone or go further down. This would be a nice trade towards the downside. On the 1-hourly time frame, as you can see, it did make a new lower low as well, so I do assume that this trade is probably going down. Although on the weekly and daily time frame, the moving averages are below, so it does suggest maybe, there's going to be a bounce again and maybe retest towards this area level. But if we have a look at the overall bias, currently it has been trending down since 2019. Nice push exhaustion push scenario, more than likely it's going to continue to move down. However, if we have a look at what hedge funds are doing, it's contradicting evidence. 11,000 over here, 10,000, so they're selling off the Swiss franc US dollar, which means that the Swiss franc could potentially bounce off somewhere around this area zone, maybe the moving averages, and start shooting towards the upside. But I really think it might not bounce. It made new lower lows. The US dollar has been gaining quite weak data, and the Swiss franc, is the safe haven, and it probably is going to continue being strong. So I believe it will push further down. Maybe a good trade would be on the hourly time frame. Maybe if we get an exhaustion, maybe towards the 50 moving average, bearish engulfing candle, go down to retest this previous area level. If it's broken, then push exhaustion push scenario would be nice. So USDCAD resistance support over here, trending towards the downside nicely. Moving averages are well above the candlesticks, which shows bearish momentum. If we have a look at the weekly time frame, same thing, just a little bit more candlesticks shooting towards the downside. Hasn't broken this area of trend line since 22nd of June 2020. It has been trending towards the downside, hasn't broken it. More than likely will continue on the daily time frame, although it's broken the moving averages. As you can see over here, it might be just a little pullback on the higher time frame. So as you can see, push exhaustion push kind of scenario, maybe to retest this previous area level of support. So this could happen, and we are getting a nice bearish engulfing candlestick to confirm that this trade is definitely respecting this area of higher time frame resistance and higher time frame trend line as well. On the 4-hourly time frame, it's near the moving averages, so what I suggest you guys do is wait for a break of 25 and 50 moving averages, push exhaustion scenario. If we get a bearish engulfing candle bounce off the 25 and 50 moving average, we can go and retest this previous area zone. More than likely it's going to be this one over here, although this trend is here. If it breaks the 25-50 moving averages, I believe it will go down even more. Let's have a look what the hedge funds are doing. Again, contradicting data. 45,000, 41,000 Canadian dollars getting weaker, so we have to have a look at different scenarios now. If it bounces off the area zone, maybe pushes towards the downside, I believe this daily push towards the downside near the 25-50 moving averages, it is likely that it will bounce towards the upside for another push scenario, kind of squeeze scenario over here. So push, enter here, go towards the upside. That could be another alternative scenario. However, I do believe if it does break the 25-50 moving average and give us a bearish engulfing candle as confirmation, without bearish engulfing candle as confirmation, you don't enter the trade. But if we do get it, it's going to be a nice trade towards the downside. So let's say if we shorted this trade, if we get maybe potentially a nice 90 pip profit, take profit one, obviously like 30 pips or something like that, move stop loss to entry for risk-free trade, and that's the way we manage our risk. Not much to look at on the monthly time frame, trending towards the downside, bearish engulfing candle as confirmation to probably gonna retest the 25 and 50 moving averages on the monthly time frame. Weekly, we can see a nice resistance zone, a nice little consolidation over here, a little break of consolidation. As you can see, this area zone was broken, had an exhaustion, and now currently trending down, breaking the 25 and 50 moving averages on the weekly time frame, which is super important. Now on the daily time frame, we can see a nice trend towards the downside, which also shows great bearish bias. Aussie has been generally weak as well. If we have a look at the 4-hourly time frame, we can see this nice downtrend. If when the markets open we get a bearish engulfing candle as confirmation, you can immediately enter this trade short for a retest of this area zone, or at least this one. So this would be where my take profit one would be if we entered over here. Could be a nice trade towards the downside. However, if it does push past it, we are looking for an entry somewhere around here, or maybe this area zone for a nice short to retest this previous low. And I'm fairly confident with this trade, because if we have a look at the hedge funds, 17,500, 17,800, and now 24,000. So they're selling off Aussie pretty heavily, and it will likely continue shooting towards the downside. The likely bias is definitely towards the downside rather than the upside. Now GBPUSD monthly time frame trending down, areas of sensitivity, nice bounce over here, this area zone, nice bounce, but did not get a bearish engulfing candle. Moving averages are quite away, so it does suggest that maybe a pullback is about to occur. Let's have a look at the weekly. On the weekly time frame is a little bit different, a nice little bounce over here, but bearish engulfing candle of the 25 and 50 moving averages, a nice little support over here, does suggest that maybe another push towards the upside is likely to retest this previous area zone and then maybe continue to go down. On the daily time frame, the moving averages are well above it, so it could be a nice bounce over here as well. Maybe potential break, I don't know actually, I'm not 100% sure, so we have to have a look at the 4-hourly time frame. Now 4-hourly time frame, a nice downtrend over here that has been broken with a push. This push does not seem like it had a pullback, so very likely there could be a pullback before it continues to push up. If it does, the little push up more than likely will be towards these moving averages. So if we have a look at the 4-hourly time frame as well, we may search for another potential downtrend, and it could be this area zone. Let's have a look at the daily. Yeah, around this area zone, it could be a nice downtrend. So I would say this area zone is pretty important. As you can see, that's where it would cross. So if it does reaches this area zone, you could potentially short this trade. Is there a buying opportunity? I'm not too sure. I think if we get a nice pullback towards these moving averages, then it could be a nice trade towards the downside. Currently, the trade on GBPUSD is well overbought. As you can see, shooting towards the upside pretty damn heavily. It needs a pullback near the moving averages, before we get a push exhaustion push scenario, bullish engulfing candle as confirmation, shoot towards the upside towards this potential area zone of sensitivity. Right now, EURGBP had a nice push, now kind of consolidation, and it's been in this consolidation since 2016. So not much to say. 4 years it has been consolidating. Very likely this will continue. It has been shooting towards the upside as well. So this area of trend line is definitely going to be respected since it's the higher time frames. On the weekly time frame, we can see a nice push towards the downside. Moving averages are above, so it suggests bearish bias. Monthly is the same, weekly is the same. Daily, what's happening? A daily, as you can see, this is very nice actually, a daily bearish engulfing candlestick. As you can see, this candlestick is bigger than this one, suggests potential, again, bearish bias towards the downside. Since it has been trending towards the downside on the monthly, weekly and daily time frames, more than likely this will continue. And if we have a look at the 4-hourly time frame, it's currently on a nice support area. Now this support is super important, and this is probably where most people will fail. If you enter over here short, it could be maybe a good trade, but I believe it will probably bounce off this area zone since it has been doing so for the past month. So if we get the exhaustion once again, bearish engulfing candle off the moving averages, then it could be a nice trade to retest this zone. So if we enter this trade somewhere around here, and then if it breaks this zone, you move your stop loss maybe to entry or closer, and then you continue your profit gain, continue, a push exhaustion push scenario to maximize your profits. That's the way I would do it, and suggest you guys doing it as well. But now selling it, not a good idea. Maybe buying it would be a good idea if you want to trade the pullback, but then again, that's risky trading because the overall bias on the higher time frames is a short trade. So you rather wait for a push exhaustion scenario before you continue to sell along and gain profit. Right, so last but not least is gold, trending towards the upside nicely on the weekly time frame, trending towards the downside. If we have a look at the moving averages, let's see what the 200 moving average is doing. Quite far away, so still trending towards the upside. 100 moving average is around this area zone as well. As you can see, it's following our nice uptrend, so very likely I don't see this trade going down or past the 100 moving average. Since the US dollar news has been kind of lacking a little bit, I believe the safe haven gold in this case is gonna carry on increasing towards the upside. And general bias for gold, you should always buy gold because gold is a commodity that never loses price and it just gains price over time. So my general bias always is never to short gold. You always want to buy gold. So on the daily time frame as well, nice little push scenario, kind of losing momentum a little bit, but this all depends on news events as well. We currently have this little downtrend over here, so if it broke out, it would be a nice trade push exhaustion push scenario on the daily time frame. On the 4-hourly time frame, it's trending towards the upside, bullish engulfing candlestick, so I do suggest buying it. Maybe if it pulls back a little bit more of the moving averages over here, could be a nice trade towards the upside. I wouldn't buy it now over here because it's kind of near this area top level. You wouldn't profit much. Maybe a nice scalp trade on the lower time frames, but I would suggest maybe waiting for a nice push scenario. As you can see, it's kind of consolidating over here. Push down, then go back up with a bullish engulfing candles confirmation. Could be a nice trade towards the upside. We need to have a look at the higher time frame perspective. Our trend lines are telling us, it's on a squeeze pattern. It's been doing this push exhaustion push scenario. More than likely it's going to come back for another push before it decides its next step to maybe carry on and retest this previous top level. If it does, then push exhaustion push scenario. If it doesn't, then maybe it's gonna go down and retest this previous area level, which is not likely. Anyway, if you enjoyed these videos, make sure to leave a like. It motivates to create more content for you guys. And if you would like to join our premium services, we are smashing the markets as always. Is the first link down in the description below. And that's it for now, traders. See you next week. Goodbye.